Hey everyone, Jay Cottrell here. It is time for a month-end report. We're gonna take a look back at the data for August and see what it might predict and where things are heading throughout the year. So our agenda today is look at where mortgage rates are, look at where the national real estate market is, talk a little bit about the impact of presidential elections on the housing market, and then look at our local August real estate stats. Now, before we get into that, little quick promo for myself. There are two things that I do want to point out. One is that my seasonal buyer and seller guides are now available. I will put a link to them down in the description. It's free. It's no cost to you. If you want one, just click the link to request one. And also, I have two publications out as well to help buyers and sellers right now. The one for sellers is called 9 Critical Questions. These are questions to ask any real estate agent that you're thinking about working with to sell your home. And then the other one is 7 Home Buyer Strategies that work in today's market. So I'll put a link for those ones as well to request your free copy. Now, little word of warning, this video is a month-end video, and this one's going to be a little bit long. There's a little bit long. There's quite a few things that I want to talk about with you today. And I'm going to go ahead and mark chapters in this if you're watching this on YouTube, so that if there's certain things you don't want to watch, you could just go ahead and click on to the next chapter that has the information that you really want. If you're watching this on Facebook, sorry, it doesn't allow me to do that, but I will put a link to the YouTube video in the comments down below if you want to go that route. So, what do you say we go ahead and get started? All right. So as we talked about, let's go ahead and get started with the mortgage market. Now, I pulled these this morning from Mortgage News Daily, and you can see the date on there. Today's date is September 13th. It's Friday the 13th. So you can see mortgage rates have significantly improved this year, which is not surprising. If you go back and look at presidential elections, rates always seem to dip right before a presidential election, no matter which party is in power. But we just won't go there for now. So if you want to look, so mortgage rates are really good. If you look at the average 30-year fixed mortgage rates all the way back through 1971, you can see we're approaching right about the midpoint of where mortgages are. So they're returning back to what I would call an historical normal rate. The Federal Chair Powell signals that the time has come for the September rate cuts. Jerome Powell used a speech in Jackson Hole to signal that the Federal Reserve will begin to cut rates on September 18th, and also to voice wariness about the job market. If you look at the mortgage rate projections, now, yes, I did just talk about the Fed rate, which is not directly related to mortgage rates, but obviously does have some effect on mortgage rates. And one of the things I want to say is most of the experts don't expect any more dips in mortgage rates due to the Fed rate cut. The reason is the current mortgage rates have already baked in anticipation of a rate cut. So the only thing that could make them change would be if the Fed actually cuts them more than were expected or less than was expected. So we'll have to wait and see that. But if you look at Fannie Mae, MBA, NAR, Wells Fargo, this is where they're forecasting rates through the fourth quarter of 2025. So you can see, yes, they do expect them to decrease, but those are still somewhere around between 5.5% and 6%. So definitely not going anywhere near those sub 4% or sub 3% rates that we saw. And honestly, those were historical aberrations. So if you're thinking that we're going to get back to those rates, I would just say don't count on it. Is it possible? Anything's possible, just not likely. So now, moving on from mortgage rates, let's take a look at the national real estate market. So nationally, the market is balancing. What do I mean by that? Well, What defines a balanced or neutral market? You can say here's three different definitions. US News says in general, it's a housing market with 5 to 7 months supply. And again, Realtor.com says a 5 to 7 month supply of home indicates a balanced market. CNBC says a 6 months is considered a balanced market. So, what are we talking about? We're talking about the month's inventory of homes for sale. This is what we call the absorption rate. So, if you've heard me talk about this rate before, it looks at the current pace of sales on a monthly basis. It also looks at the current inventory of homes for sale, divides that, and you get a month's supply. So basically, how long it would take to sell out of the current stock of homes that we have. We look at that as a quick indicator of whether we're in a buyer's market or seller's market. You can see seller's market is anything less than 5 months. Supply of inventory. A buyer's market is anything greater than 7 months. And that balanced market is right there in the middle between 5 and 7 months. You look at this graph today, nationally, we're on the upper end of that seller's market. We've been heading towards a more balanced market, but we still got a lot of room to get there. So homes are sitting on the market a bit longer, and homes are receiving fewer offers. More buyers are insisting on home inspections and appraisals, and inventory is definitely rising on a national basis. This is Lawrence Yun, chief economist for NAR, and we see that here locally. We've seen that for a while now. That buyers are no longer just willing to throw caution to the wind. If they're spending the money that they're spending on a home, especially where the interest rates were, they want to make sure that home is solid, that they're not buying a problem, and there's no more money they're going to have to put into it. So this is somewhat to be expected as we start moving towards a more balanced market. Homes are sitting on the market longer. You can see right now, on a national basis, Realtor.com says that homes are sitting on the market 53 days before going under contract. You can see it was actually higher at the beginning of the year. So I put a little caution in that data because, yes, homes are sitting on the market more than they did last August and more than they did August of 2022. But if you look at those peaks at the beginning of this year, we actually had homes were selling faster than they were at the beginning of 2023. So I would take this metric with a bag of salt because it's very dependent on demand. Inventory is increasing. Look at the inventory of existing homes at the current sales pace. Nationally, we're seeing at about 4 months supply. So like I said, 5 months is the very bottom end of a balanced market. 6 months obviously is right in the middle. So yes, we have moved closer towards the bottom end of a balanced market, but we're still not there yet. And there's a few things that might prevent us from getting there, which I'll get to a little bit later. Number of price reductions is increasing. So sellers are having to negotiate not just on inspections and appraisals and other things, but they're having to negotiate a bit on price. But one thing I want you to take note about this is pay attention later, because while they're having to negotiate, the final closed price is still outpacing where we were last year. Home prices are moderating. So you can see, during the craziness of 2021 and 2022, home prices were, going up 20% year over year. We're back down more to the more normal 3 to 5%. The faster housing supply increases, the more affordability improves, and the strength of a seller's market wanes. Notice they didn't say that the more we move away from a seller's market, but they did say that the strength of a seller's market wanes. This is Mark Fleming, chief economist for First American. Lawrence Yun again says that homes priced right are selling very quickly, but homes priced too high are deterring prospective buyers. And this is something, if you've ever sat down with me in a listing appointment, I talk about how pricing is very important. And since we're no longer in those multiple offer scenarios that often, pricing is even more important. Buyers are no longer willing to overpay for a home. And if they see a home that's overpriced, a lot of them just aren't even willing to look at it. They just don't want to go there. So that is why pricing is so very important. And this is from US News. This is a quote. It says, setting an unrealistically high price with the idea that you can come down later doesn't work in real estate. And I talked to many sellers that this is what they want to do. Okay, I know that you tell me that this is what my home's worth, but let's put in a little margin for negotiation. Let's go up, or let's just go for high. And if it doesn't work, we can bring it down later. I know some agents that don't don't have strong negotiating skills, won't sort of push back on their seller to say, hey, look, if we do that, it's actually worse than underpricing it, because a home that's overpriced in the beginning tends to stay on the market longer, even after the price is cut, because buyers think there must be something wrong with it. So trying to overprice it and then come down just doesn't work. And again, more from US News says, if you want to sell your house for top dollar, you need to be realistic about the value of the property and how buyers will see it. If you've overpriced your home, chances are you'll eventually need to lower that number. But the peak period activity, which is the first month or two of a home being on the first few weeks of a home being on the market, is gone. So you don't want to start out overpricing your home. I hope that makes sense, because that's not just me saying it. That's not just some real estate agent saying it. This is US News telling you that. Now let's take a look at the impact of presidential elections on the real estate market. Couple things I want to point out. One, there's always a slight seasonal drop in sales the month prior to a presidential election. So you can look at this is looking through October through November. You can see on a normal non-election year, the drop is about 9.8% from October to November. During presidential election years, it's almost double at 15%. So there's a little bit more drop, bigger drop. No surprise. A lot of people that just are waiting till after the election to do anything, whether that's buy a home, sell a home, buy a new car, make any type of big decision. So that should not be surprising. You look at home sales, those went up after 9 of the last 11 presidential elections. So sales slow down more than normal going into the election, but after the election, they go back up. As you can see, all but 2 of these elections since 1980, did you see sales go down. Now, existing home prices have also gone up after 7 of the last 8 presidential elections. So don't expect home prices to go down. And if you look at this graph, it really doesn't matter which party wins. It's more of the same on all of these. In addition to that, mortgage rates have tended to decrease leading up to 8 of the last presidential elections. So we have seen that this year as well. So this looks like it's going to be more of the same from all of these statistics, a very normal election cycle. So yes, we've seen that slowdown prior to election, but we can expect things to pick back up and there to be a post-election bump in the real estate market if we base it on what's happened over the majority of the last several presidential elections. Now, let's go ahead and move on into the local real estate market. And we'll take an overview of the August sales data to show you kind of where we are and where I think things might go. So first, if we look at the number of new listings coming on the market, you can see that that is very similar to the pace that we've seen over it's better than last year, but it's very similar to 2022 and 2019, which was before the pandemic. So again, the rate lock effect held a lot of people in last year, so they weren't as eager to put their homes up for sale. We've seen that continue this year, but it is moderating a bit, which is why I think you see that the number of new listings coming on the market each month is back to much closer to previous years. we look at the total listing count, this is looking at not just the active, but the pending and the sold. You can see that overall market activity is higher than 2023 and 2022, but it's still nowhere near the activity level of 2019. Where about this time, this time we were at 4,500 or so total listings on the market. If we look at pending listings, which gives one of the indicators of buyer demand and activity, you can see that last month wasn't really slow compared to other trends, but we recovered and we're back right on trend this year, right in line with really previous years. You look at that, there's not much margin in between the different years. So demand has sort of returned back to normal and flattened out, as well as the number of new listings coming on the market has somewhat flattened out. If we look at sold listings, you can see that's been fairly erratic this year, but overall similar to last year, which means demand is similar to last year. Now, if we take a look at our inventory levels or number of active listings, I did add in another year to these graphs that I had taken away, which was 2022, just because I wanted to show a little bit more of a year-over-year trend. So you can see that this year, while we have more inventory on the market and we actually have crossed the 2,000 mark for number of active listings, which the last time we had over 2,000 listings on the market was April of 2020. So it's been a long time since our inventory levels have been here. However, if you look at that solid blue line, that's the balanced market number target that we would need to be at. And so we've still got 800 or so listings to make up to get there. Now that balanced number is coming down as demand has kind of flattened out a little bit, but we're still got a little bit of ways to go. You can't just drop 800 to 1,000 listings on the market overnight to get us there. And overall, the sales pace is still higher than last year, higher than 2022, but still nowhere near 2019. Now, again, talking about that balanced market, this is where our months, that absorption rate has been each month this year. You can see right now, August, we were looking at just over 3 months of inventory. So again, we've been making gains. It's been sort of flat this year, but started moving up a little bit right now, but still nowhere near that lower limit of 5 months. We still got a lot of movement there. Because of that, you can see that our sales prices have continued to increase. So again, the demand is still a little bit higher than supply, which is going to continue to put upward pressure on home prices. But like a lot of things, that has moderated out this year as well. So that if you look at the percentages, the average price was up 8% in August compared to August of last year, and the median price was up just under 4% compared to August of last year, which is much more normal rates of appreciation, and nowhere near, if you went back and looked at August of 2021 compared to August of 20, that was almost a 22% increase in home prices and sales prices. So we've gotten out of that craziness and we're looking at more normal appreciation. If we look at the sales to list price ratio, again, sellers have no surprise, if you can see from previous graphs, as we head into the fall, sellers are having to come down off their list price a bit more than during the rest of the year. We just saw that happen a little bit earlier with the slowdown in July, but still 96.9, that's 97%. So that's still pretty close to asking price for most sellers, because that means that there's plenty of them that are still getting exactly what they listed the home at. So, final thoughts. One, if you haven't noticed the theme through here, the market has returned to more of a normal pace. What do I mean by that is if we look at demand, which is the number of pending and sold homes, that's relatively flat and in line with previous years. The supply, the number of new listings hitting the market, has been relatively flat as well, but slightly higher than last year. The result is our inventory levels have been slowly climbing, not fast climbs, but slowly climbing, which is kind of more what we're used to. So if you look at the mortgage rates, those are also returning to more of historical levels. Home appreciation is returning to more normal levels. Um, so the one thing I wanted to note that when we saw the information about presidential elections, there could be a post-election bump, just like there has been in most of the years prior that we've had presidential elections. That could bring an imbalance back to the supply and demand in our local market. Um, if it increases demand but supply remains flat, we're going to see our inventory levels decrease and home prices move up a little bit at a little bit faster pace than we've seen so far this year. But at the same time, that could get a lot of people wanting to list their home as well, because a big chunk of home buyers also have a home to sell. So it could still continue to balance itself out. But I don't know that we'll necessarily reach balanced market conditions within at least the next 6 months. Maybe towards the end of next year, we'll be in that we'll cross that 5 month threshold that'll put us in a balanced market. But I think it will take a while to get there, because it is really easy for a real estate market to absorb listings and decrease inventory. It's really, really hard to build that inventory back up. So I hope that you found all that information extremely interesting. I know looking at numbers and data can be somewhat boring, and I try to make it more interesting and funny, but honestly, that side of my personality just doesn't do it. So I can be very funny and jovial, but not when it comes to looking at data. So um, if you have any questions, want any more information, want to talk about what all this means for you, if you're thinking about selling your house or if you're thinking about buying a house right now, just reach out. We'd be glad to talk with you with no obligation, but just try to help you out as you're trying to think about either selling your home, or if you have other property or land, or if you're looking to purchase something here in the near future. That is it for this month. We'll see you next month.